Hi folks, welcome to this video from your review session on a not-for-profit case. Remember, on the exam, we do need to make sure that we can test your ability to assess a case and to do a little bit of writing and a little bit of critical thinking, so to say. So this case is one that is just given to you here. It's not in a memo format, but on your exam, you should make sure that if the question says to write a report, you write a report. If it says to write a memo, you do so in a memo format. Now, the memo format would be just like your email editor, to, from, subject line, and a date, right? But the most important thing I'm trying to get across here in the review is what the issues are in the case and that you can identify them and briefly describe them. Now, the response we're making here is only in point form. We want full paragraphs and full sentences on the exam, but I just want to make sure that we don't miss any points. So some of the issues and recommendations that you might want to make with this case, and again, as I said with the other videos, make sure you have the question in front of you so that you can at least know the facts of the case and understand why we're raising them as issues. Now, we do know here that the company is not using full accrual accounting. We want them to adopt that. It says here that membership fees are recognized as revenue when they're received, right? Well, that's not really in line with accrual accounting. But the idea is that since their funding would be dependent, funding would likely be dependent on whether or not the financial statements that they're providing to the lender were really in conformance with generally accepted accounting principles, whatever they are for your organization. If it's an organization that reports under, IFRS, or again, under the a not-for-profit standards in the SECA handbook, you just have to make sure that that all of those standards are adhered to, because certainly nobody is going to lend you money, whether it's a bank or anybody who's bequeathed money to you. The person who's assessing the estate, they're going to want to make sure that the statements are prepared in accordance with some set of recognized standards. So again, we'd want to know that they've passed an audit and they are audited statements. And again, we do know from the case that they are going to be looking for some financing to build a building because they were renting now. The other thing we mentioned was that revenue recognition needs to be dealt with. We did talk about the fact that the membership revenues were recognized as revenues when they're received. But again, we need to make sure that in order to conform to our reporting principles, that they're recorded as that they're recognized when they're earned. Okay. Now, they also made mention here that rental revenue is being received in advance, and again, we need to make sure that that rental revenue is recorded as revenue when it's earned, not when it's received. Because if it's received in advance, it's a liability. It's an unearned revenue, right? And again, we want to make sure that the not-for-profit accrues all of the revenue for any of the billings that are uncollected. So again, they need to record revenue when it's earned, not when they actually collect it. So now, we also want to mention here that because the not-for-profit is using volunteers, that's something that's very common, but it's really more a point of control and audit when you really look at the fact that they're using volunteers to handle the billing. That can create some opportunities for error, because even if you go back through the case, some of the billings are a little bit complicated. Equipment rental fees are based on a weekly or monthly rate, so you got to make sure that people know what they're doing. And one of the questions that comes to my mind is, are these volunteers adequately trained? So VCS needs to ensure that proper training is placed so that these volunteers are doing the job correctly, and to make sure that there are some checks done, whether it's at the end of every week or the end of every 2 weeks or month, to make sure that the billings are being recorded and handled properly. Now, we also know that there was a grant that was offered by the provincial government for exercise equipment. That $6,250 grant should be recognized in some kind of fund, because they've now met the requirements for the grant. So the fact that VCS has met the requirements, they should set it up at a receivable at the year end and set up the grant as a restricted fund. Whether they use the restricted fund method of accounting or the deferral method doesn't matter. But what we would say here is that they definitely need to make sure that they treat the money and set it up as a restricted fund, just to show that the money coming out of the fund was used specifically for the purposes of buying that equipment. All right. Now, they have a fundraising campaign going on, and in the fundraising campaign, we know that they have some pledges that people are making for their event. Now, we need to make sure that those pledges, if they can be reasonably estimated and collectability is reasonably assured, that they are accrued. So we need to question whether or not there is some past history that VCS has had with raising pledges, and even if they haven't had an estimate for uncollectible pledges, that they do have sufficient history there so that they can actually set up an accrual. All right. Now, they did also say they were giving prizes, so we should actually book the prize expense to match the pledge revenue, just so that we're adhering to generally accepted accounting principles under matching. Now, the other thing I thought about here was the fact that they're doing a special event, which is quite dangerous. It's a skydiving event. So we should make sure that there's some special events insurance in place to protect VCS in the event that somebody gets hurt, and they may be liable if it's in a court of law or whatever, but they should have some kind of special events insurance. And we already know that there's been some land donated by a donor for their building, and we need to make sure that the land, because it was donated, is recorded at its fair value. The other thing I didn't mention here that probably should be mentioned is the fact that the organization VCS, they expense all of the equipment as they acquire it, and they don't amortize. It's not clear in the question whether or not they actually meet the threshold for income over the 2-year period of $500,000 or more, in which case they would have to capitalize and amortize. We don't really know. But the idea would be we should probably assess that to see whether or not they meet that standard, and if they do, recommend that they capitalize and amortize. So these are some of the things that you should be prepared to identify. Now here we've got several points that you could make that relate to that chapter on not-for-profits. And this question, just to uncover the issues, put it in a proper format and fully describe them to demonstrate that you understand how the section of the handbook's being applied. This could be worth, anywhere from 10 to 15 marks. So make sure that you know how to put together a memo or a report. You did this in an assignment if you're in the distance class. If you're in the in-class, we did it in class. So make sure that you go over your notes for that section. Anyway, this concludes our review of the not-for-profit case.